Hello and welcome to EdQuest. This is day 24 of our RBI Grade B daily quiz. So day 24 was about money market. So let us see what questions we are discussing on day 24 regarding money market. So the very first question that is on cash management bill. So the question reads as, which of the following instrument is available when there is a temporary mismatch in the cash flow of the government? So option given are treasury bills, cash management bills, government securities, certificate of deposits, and ways and means advances. So a lot of people correct answer is cash management bills. A lot of people have are marked it as ways and means advances, and also quite a few have marked it as treasury bills. So let us understand what are cash management bills and what are ways and means advances. When you understand this CMB and WMA, you will know how they are different and why the answer to this question is cash management bills only. So let us resume. So imagine this is an account of Government of India. This is the Reserve Bank of India. This is Government of India. We are right now imagining a situation before 1999, after which ways and means advances were introduced. So before that, I would like to clear one thing. Question asked about which of the financial instruments which addresses to the issue of temporary mismatch in cash. Right. So answer to that is cash management bill. But when you study ways and means advances, you will get to know that even ways and means advances also addresses to the problem of temporary mismatch of cash. But if you look into finer details, the question asked about which financial instrument. So one simple point which has to be noted here is that cash management bills are financial instruments, whereas ways and means advances is a mechanism. So in whatever text or textbook or RBI's website, you read about ways and means advances and you read about cash management bills. So about ways and means advances, it says that it is a mechanism. So like we have treasury bills or say commercial bills, commercial papers. So these all are financial instruments. Ways and means advances in no means is a financial instrument. It is a mechanism. It is a mechanism with which temporary mismatch in government's cash is managed. So that was about the question which I forgot to tell you. So let us move towards cash management bills and ways and means advances. So I'll repeat. Let us assume this is government's account. This is RBI. This is Government of India. And we are imagining situation before 1999, after which we introduce ways and means advances. So what used to happen, that there was a mechanism called ad hoc T-bills. Now these do not exist anymore, but when it used to exist, what Government of India would do, or what agreement there was between Reserve Bank of India and Government of India, was that Government of India was supposed to maintain rupees 50 crore on any given day in its account. So in this account, Government of India was supposed to maintain 50 crores. But Government of India is very infamous when it comes to maintain fiscal prudence, right? So we always falter on our fiscal policy and we end up spending more than what we earn. So that is why, because of that, what Government of India would end up with, that it would always have, like more often it would have money less than 50 crore. And what was the arrangement between Government of India and Reserve Bank of India? The arrangement was, whenever this falls below 50 crores, RBI would issue ad hoc treasury bills and it would refill that account. So it is like government Reserve Bank of India used to top up Reserve Bank of India used to top up Government of India's account whenever it fell below this 50 crore rupees, right? And when it comes to ad hoc T-bills, Reserve Bank of India would issue ad hoc T-bills to herself, and whatever money it would have, it would give to this particular account to maintain that margin. But as we said, that Government of India has very bad habits, that it spends more than it earns. So what happens when you do such a practice on a regular basis? So this difference would end up accumulating, right? So this accumulates and it keeps accumulating, and Government of India then what it would do, it wasn't repaying that particular amount which was refilled by Reserve Bank of India. So this difference would increase to an extent that liabilities of Government of India would far exceed than its capacity to repay, right? And to an extent this ad hoc T-bills would come from printing of money. So right now what how government finances herself. So whenever Government of India needs money, it would ask RBI. RBI would issue securities on behalf of government, and it would take money from the market. So whosoever has excess money would buy this Government of India security and give that money to RBI, and give that money goes to Government of India. So this way, as there is a certain balance which is still maintained in this mechanism. But when it comes to issuing of ad hoc T-bills, RBI wasn't taking this money from market, and this would ultimately result into pumping of additional money which there is no space, right? So this was whole mechanism which existed before 1999, after which RBI decides that let us no longer continue with this particular mechanism. So in 1999 there is agreement between Government of India and Reserve Bank of India, and they together introduces ways and means advances. So what do they do with ways and means advances? So with ways and means advances, now Government of India's fiscal year, like it is divided into two up to say June, and this is again April or March, sorry, this is April. So RBI through ways and means advances would uh, give Government of India that money wherever there is like paucity of cash, or what we called it in case of cash management bill, that there is mismatch of cash, temporary mismatch. So now every year or frequently Government of India and RBI makes an agreement. So let us agree, like for up to the period of June, RBI would give Government of India certain amount and as a ways and means advances, and after June, then period from June to say April, there would be certain other amount fixed, right? So this is now the agreement between Government of India and RBI. Now earlier we had seen that Government of India would get money from RBI, and RBI used to issue ad hoc T-bills. So this wasn't the money from the market, this was purely out of the pocket of RBI, right? So now when ways and means advances are introduced, Government of India gets money from again RBI, but RBI issues cash management bills. So this ways and means advances is a mechanism and this is cash management bill is an instrument. So through cash management bill, Reserve Bank of India would provide money to Government of India, right? So we earlier had discussed that there is like some certain limit, periodic limit is there. So whenever, like say this is account of Government of India and there is certain limit that which is renewed, and even recently it was renewed. So whenever this balance in this account, or sorry, not balance, but there is like limit. So limit, let us say x is rupees x is the limit given by RBI to the Government of India, and Government of India get up to rupees x from this particular account for its finances, right? So whenever this limit is crossed to 75%, so let us assume that RBI gave Government of India a limit of 100 rupees through ways and means advances, and Government of India already have taken 75 rupees from this account. So what RBI would do immediately, RBI would issue cash management bills. So this cash management bills would take money from market and would keep margin in this account. So it will be again periodically topped up, but not recklessly. Okay, so this is one part. Another part in here which is introduced, that is if government ends up spending more than the limit, then that would be considered as overdraft. Now whenever there is overdraft, so whatever amount that is taken by Government of India beyond overdraft, that would be charged like ways, and this particular limit is charged at repo rate. So Government of India gets this money or this particular limit as per the rate of as per repo rate. Interest, whatever interest Government of India has to pay on this money is repo. But when this limit is crossed, so this there is overdraft, and for that overdraft limit is plus 2% of repo, right? Then there is another mechanism which limits spending of government, is government can continue to take overdraft for 10 days only, and if it goes beyond 10 days, there would be like no payment, or Government of India and Reserve Bank of India would sit and see what has to be done. So now with this based on means advances, the reckless spending of Government of India has been put to a limit. So ways and means advances, there is like RBI Act of 1934, and there is some section, I guess 17(5). So these are introduced, or this function under this particular section of Reserve Bank of India Act, right? So I hope you get this particular difference between cash management bills, why they are financial instrument, and how ways and means advances are a mechanism. So this is little complex, but if you remember this it conceptually, and particularly these particular parts, that there is a limit, then there are, if limit is like reached to 75%, Reserve Bank of India would issue cash management bills, and even that limit is breached, there would be overdraft would be plus 2% of the repo rate, and that overdraft would be continued to only 10 days, not more than that. After that, there is like Government of India has to sit with RBI and do something. Okay, so another point I actually missed was about cash management bills and how they differ from treasury bills. So both are more or less same, but the only difference is we issue treasury bills has a tenor of, I guess, 91 days. Then there is another tenor of 180 days, and then that is 364 days, right? So there can be these three tenors in case of treasury bills. Again, these are issued at a discount. I just assume you know what we mean when a financial instrument is issued at a discount. Okay, so again, cash management bills, these are issued at a discount. These are also short-term financial instruments, money market wale. But this can be anything between 7 days and 364 days. So as we have seen in case of treasury bills, they are like particular number of days. There will be 91 day treasury bills, 180 days, but cash management bill can be anything. So it can be anything 8 days CNB, or say 48 days, or say 156 days. It can be anything. The rest of the part between cash management bills and treasury bills is completely same. So I hope this clears your understanding and gives you a better picture towards ways and means advances and cash management bills. So I'll move to next question now. So next question is again very simple question. We have done repeatedly now these questions on money market. So commercial papers can be issued for a minimum tenor of, so they can be issued for a tenor of from 7 days to 364 days. So in our SEBI grade A previously asked question series, we already have done question on this particular part, that what would be the maximum tenor, and in explanation video of that part I already had explained that minimum tenor can be of 7 days. So that was an easy question. So let's move to next question. So next question is about which of the following has the shortest tenor. So shortest tenor, that is of call money market. So it is also called as overnight money market, and it is for 1 day only, right? When it comes to notice money, it can be between 2 to 14 days, and term money, as we all know, so it can be like up to 364 days. Capital money, no need to tell. So okay, I hope this question is again clear. So call money market has the shortest tenor. Then let's move to next question. Dash is the rate at which RBI lends funds overnight to scheduled banks against government securities. So again, this was simple, rather most simplest of the question. So when it comes to lending money against government securities, so that is marginal standing facility. So even if you go through definition of all these things, that would be like very clear for you. So I hope there will like only 4 questions were there. I have discussed most of them in wherever detail was possible. I have given details. I hope you have liked it, and if you have liked it, kindly like, share and subscribe, and press the bell icon so that you are always notified whenever we come up with new video. Thank you.